China has sold a total of 190 billion US Treasury bonds in the past year, and its holdings have hit a new low in 12 years. What is the signal behind this? China throws the difficulties and pressure back to the United States, making the United States face challenges. According to official data, at the beginning of 2022, China held $1.06 trillion in US debt, which dropped sharply to $870 billion after 11 months, a decrease of $190 billion in US debt, the lowest in 12 years. Level. Data from the U.S. Treasury Department in mid-January also showed that in November last year, China reduced its holdings of U.S. debt by $7.8 billion US debt, and the operation of reducing U.S. debt has been maintained for 3 months. It can be seen that China has great strength and determination to reduce its holdings of U.S. debt. Coincidentally, Japan, the largest holder of U.S. debt, is also selling U.S. debt sharply. According to data, in the past year, Japan has sold more than $246.4 billion in U.S. debt. So the question is, as the two major holders of U.S. debt, they are selling U.S. debt sharply. What happened behind this? And why is it said that selling U.S. debt will make it hard for the U.S. to ride a tiger? Let's look at it bit by bit. Let's talk about Japan first. Japan's economy has been sluggish in recent years, and at the same time it has to repeatedly endure the wealth harvest of the United States, which has led to a serious decline in Japan's domestic economy. Let's look at a set of data. Due to the interest rate hike in the US dollar, Japan depreciated from 115 yen per dollar at the beginning of last year to 150 yen per dollar at the end of last year. Some analysts predict that as the US dollar continues to raise interest rates, the exchange rate of $1 to the yen may rise to 160 by then. The U.S. financial website Zero Hedge analyzed that due to the depreciation of the yen, Japan may sell up to $1 trillion in U.S. Treasury bonds. Experts also said that Japan may lose the next 30 years due to the interest rate hike of the U.S. dollar and the depreciation of the yen. It can be said that in this round of the U.S. dollar interest rate hike cycle, 1/3 of Japan's domestic wealth has been looted by the United States. If Japan does not take corresponding measures, it will only get worse in the future. In this situation, in order to stabilize foreign exchange and stock market, Japan can only save the market by selling U.S. debt. Since Japan sold U.S. debt to save itself, what is the reason for China to sell U.S. debt? Is it also self-help? Let's look down. All in all, this is done to further stabilize the RMB exchange rate. In the past year, it can be said that the RMB has depreciated the least against the US dollar among the international currencies. So far, the yuan has fallen to 6.77 per dollar, about the same level as in 2019. This also means that the continuous rate hike of the US dollar will actually have limited impact on China's economy. Of course, this is due to China's solid foundation and huge foreign exchange reserves. We all know that the depreciation of the renminbi against the US dollar is nothing more than the result of investors selling the renminbi to increase their holdings of the US dollar. Then China has the second largest amount of foreign exchange reserves in the world, so when the RMB is depreciating, China can use a large amount of foreign exchange reserves to support the currency, thereby stabilizing the RMB exchange rate. Now, according to the analysis of FedWatch, the probability of the Fed raising interest rates by 25 basis points in March is 82.7%. This also means that the dollar will continue to raise interest rates in the future. So in this case, China sold US debt in advance in exchange for US dollars in order to further stabilize the RMB exchange rate. Because there is food in hand, don't panic. Now the US debt has reached 31 trillion US dollars, which has reached the critical point of debt. In order to solve the current domestic problems, the United States can only alleviate them by borrowing new debts to repay old debts. But this is not the way to go on. So holding a large amount of US debt in this case will have certain risks. In other words, dogs will jump over the wall when they are in a hurry. What if the United States defaults on its debts? And the United States has not done such a thing. Last year, the United States kicked Russia out of the SWIFT international settlement system and froze Russia's dollar assets, which severely damaged Russia's economy. Therefore, China's selling of US debt to keep US debt within a reasonable range is actually to avoid dollar risks. Selling US debt is also a contest. The United States has imposed chip sanctions on China for nearly 2 decades and has never stopped. From the Wassenaar Accord to the CHIPS and Science Act, to the Quadruple Alliance on Chips, and then adding 31 Chinese companies, research institutions, and other groups in China to the so-called unverified list, restricting their ability to acquire certain regulated U.S. semiconductor technologies. Recently, a number of foreign media reported that the United States is considering a complete ban on American suppliers from providing Huawei with any products, including 4G products, artificial intelligence, and high-performance computing and cloud computing products. And this time the United States did not act unilaterally, but united with Japan, the Netherlands, and South Korea, with the intention of preventing Huawei's development in all aspects. This is simply blatant economic suppression. In such a situation where the relationship between the two sides is not harmonious, China's sharp sell-off of US debt is actually a kind of contest. Now that the selling of US debt by China and Japan has suppressed the confidence of international investors, the price of US debt is facing a sharp drop, and the US debt market is almost overwhelmed. On the one hand, due to the US dollar raising interest rates, the stock market is sluggish, and facing high inflation. The US is now afraid to release water to rescue the market. Now the United States is unable to print money, and cannot issue bonds, which further increases the risk of economic recession in the United States. In addition, in the long run, a large amount of US debt has been sold, which will damage the reputation of the US dollar and affect investors' overall confidence in the US economy. The hegemony of the US dollar may be shaken. If it really reaches this point, then the United States has really shot itself in the foot.